Everybody, it is Wednesday the 6th, and you got to love it when the market broadcasts what it wants to do, and then it goes ahead and does exactly that. We were stuck below the declining 5-day moving average and the week-to-date VWAP yesterday, and today we followed through on the downside, and we're right into this area that we've identified for the last week and a half as a potential zone of support. Now, there's nothing indicating here yet that it is support. We simply have a pullback and test it, and we're at the year-to-date VWAP, we're at the 20-day moving average, the 50-day moving average, the volume-weighted average price from this low. So we're going to see, at least a tug of war in here, and you can see that, the volatility here, that it is in fact a tug of war that is back and forth and really doesn't offer an advantage until we see which side settles out and is the winner. For now, it's too early to buy because we have that declining 5-day moving average. We're aware of the level of interest on the bigger time frame, and this is just classic trend alignment. We don't have alignment, so we're waiting for it to reveal whether it's going to be able to, the buyers are going to be able to retake control in here and move higher, or if it ends up kind of bouncing up, distributing, and then we see another leg lower. It's anyone's guess. I'm not going to guess. I don't get paid to guess. I lose money when I guess. Typically, instead, I listen to the message of the market and wait patiently for it to tell its tale. The Nasdaq is in a similar spot, right at the year-to-date VWAP, last year's VWAP, the 20, 50-day moving average, and the VWAP from this low. So clearly, it's an important level. So it's a level of interest. It's not an action point. We look for evidence that the buyers are gaining control. We don't have that evidence, so we avoid, making any, big bets in either direction here. The Russell 2000. Let's just clear all this up because I've drawn on it so many times, but we do want to keep this on here because it's very important that, and I'm going to draw it in the same kind of obnoxious way that it's very easy to see the volume weighted average price off of this peak, which again will color red because that's what we think of generally as resistance. And now the volume weighted average price off of this low is where we are. We're below the 20-day moving average. We're below the 50-day moving average. And this market, as we know, is in the most trouble right now. It's below a declining 5-day moving average. We have this prior band of support in here, which now we would look to if it holds as resistance on a bounce. It's no different than what you see here on the daily time frame. This is just a fractal of what we see on the daily time frame, meaning that these trends repeat on different time frames. So if it rallies up towards that level and starts to fall away, it's most likely going to continue lower. If you want to bet short on that, it seems like a good place to do it as it backs away from that level. The semiconductors continued lower here. We didn't get any such bounce prior to it, and when we look at the daily time frame here, we have a lot more reasons to be concerned, as I've been mentioning about the Nasdaq, in that the semis tend to lead the Nasdaq, and they are stuck below the declining 20 and 50-day moving average, the year-to-date VWAP, last year's VWAP, and the volume weighted average price from this low right in here. So sellers are clearly in control, and if this prior band of support holds as resistance on any rally attempts and it starts to move lower from there, then I think that we could be in for a resumption of a larger decline, which over, who knows, over the next month maybe, but eventually brings us down to test the COVID lows. We are in a very dangerous environment for long side trades. The biotechs, found resistance where they're supposed to. Let's see how they hold up in here. Just because they're down a lot and started to turn sideways, as you know, I'm a big fan of the phrase "from failed moves." I'm sorry, not that. I'm a big fan of that one as well. But if they don't scare you out, they'll wear you out. And this was the part on the way down where you should have been scared and taken your stops. Now it's most likely that it's going to, undergo, who knows, maybe something like this, after this big move, where it took a year and a half for it to turn sideways before emerging into a choppy uptrend again. The fact is, there's no advantage to being long in this market. Financial stocks are continuing to bleed off as well. They're below the 20, 50-day moving average, the year-to-date VWAP, and the volume-weighted average price from this low. The farther we get away from that volume-weighted average price, the more likely it is that a bounce up in there will provide resistance for another leg lower. And, we were looking for a bounce in here today, up towards the 5-day moving average. Instead, it just continued lower. And, same story here. This Low right in here, prior support from that most recent move, which of course we're below the volume weighted average price from that level. We want to put a volume weighted average price on all of these recent peaks as well, to keep an eye on how does it handle the volume weighted average price from that low back here and from this peak. They're kind of coming together in this prior support area. Support broken tends to act as resistance. If it runs up from there and starts to back off, then I think you're going to see another leg lower in here as well. Energy names continue to just kind of turn sideways, still holding that 20-day moving average on a year-to-date, excuse me, the 20-day moving average on a closing basis. The volume weighted average price off of this low was tested right in here, so I think that it's important probably to have stops under there if you're long the energy names.